Hi, I'm Steve Clemens, Executive Vice President of URL Insurance Group, and thank you for joining us for the Life Insurance Awareness Series, Top Reasons for Life Insurance Ownership. Today we're talking about retirement supplement. The top reason for life insurance ownership is income replacement and mortgage protection, final expenses, wealth transfer, retirement planning, and business purposes. Of Americans today, 57% own some form of life insurance. 18% only own a group life policy. 28% only own a individually owned life insurance policy, and 11% own both group and individual. Two reasons for life insurance ownership for retirement supplement are first and foremost a death benefit. In case of premature death, generally the death benefit is paid tax-free, and to accumulate cash value on a tax-deferred basis. So who can benefit with retirement supplement strategies using life insurance? Well, generally we're seeing clients between the ages of 25 and 60. We see those maxing their existing 401k, Roth IRA, and other investments. See business owners, private business owners looking for other ways to diversify. Clients looking to protect and maximize their pension. And clients looking for flexibility, maybe accounts where they can take money out before retirement age in case they need it for the what ifs in life, maybe to help kids with college planning or anything around the house, anything at all where they needed to access cash accumulation. Advantages of life insurance. Well, financial protection and control, mitigating market volatility, those ups and downs in the market that we see, tax-deferred growth, flexible premiums, generally a tax-free distribution, no penalty on early distributions, and no required minimum distributions. Things to consider with life insurance. We want to avoid a modified endowment contract. Cost of insurance, non-guaranteed performance, surrender charges, and loss of premium. So we're going to look a little bit on retirement planning with life insurance with Index Universal Life. So we want to know a little bit about what Universal Life is, Index Universal Life. Well, it's a permanent life insurance plan. It provides flexible premium and adjustable life. Flexible premium meaning you can increase or lower your premiums. Adjustable life meaning the death benefit can go up on an increasing death benefit, and you can also adjust it down lower. There's minimum guarantees on policies, and those periods of time can be a 10-year guarantee, a 15-year guarantee, 20-year guarantee, even guarantees to age 90, 95, age 100, or even age 120. Types of universal life can be fixed universal life, where the company determines an interest rate that the client receives, or indexed, where clients can experience market gains with downside protection. Generally, the index is linked to the S&P 500. And if you look at the visual on the left of the slide, imagine a barrel with a spigot at the bottom. That's your universal life policy. And a hose filling up that bucket that's the premiums you're paying into your policy. And the company's providing interest on top of that. So your money's going into the barrel and accumulating and saving, and you're earning interest on that. Now, in a fixed universal life policy, the company will determine the interest rate. On an index plan, it's based on the indexed account. And that indexed account generally has a cap and a floor. So you'll have some greater gains on those plans. Now, there are insurance costs that come out of it because this is an insurance policy. So you will have internal costs within the policy that will come out of the bottom of the spigot. And that is a good visual of your universal life or equity index universal life policy. So the Index Universal Life Plan provides upside potential with downside protection. An Index Universal Life policy provides the opportunity to earn interest based on the upward movement of a stock index. However, money is not actually invested in the stocks that make up the index. An indexed UL or IUL has a floor, a cap, and an annual reset. The floor, the IUL, offers protection from negative returns in a poorly performing market. With IUL, you don't participate directly in the stock market, and the credited interest rate is never less than 0% guaranteed. The cap, the growth rate of the index, up to a declared cap or ceiling, becomes the interest crediting rate. You can consider it trading a bit of upside potential to gain the downside protection of the floor. Neither the top nor the bottom of the index's movement apply to the policy's index account. An annual reset, which is very important. Each year's credited interest is locked on an annual basis and a new starting point is determined. The interest credited cannot be taken away due to negative index performance, and it will continue to receive potential future growth, giving you an advantage of compounding interest and continued cash value in the future years. We like to say zero is your hero with an indexed account. This is a snapshot of the last 19 years of the S&P 500, and we compare that to an indexed universal life with a 9.5% cap. So again, the product we're comparing to is a 9.5% capped or ceiling product with a 0% floor and 100% participation rate. And if you look over the last 19 years of the S&P 500, the historical annual compound average at the end of 2021 would be 7.27%. Now the indexed universal life plan with a 9.5% cap over that same period of time had a historical compound average of 6.2%. So yes, it is about 1% lower than if all the cash accumulation and was in the S&P 500 directly. But you take out all the peaks and valleys of the S&P when you have the negative years. So specifically the down years. So timing is of the essence with many clients who are nearing retirement or close to retirement. Those clients were retiring in the 2009, 2008 period of time. They could have lost 38.5% of their money if it was fully invested and not in a capped plan with a capped plan and a floor of 0. So it takes away all of those lean years with making 0 our hero. And if we reevaluate this at the end of 2022 here, we're going to find that these averages come a little closer together, considering that current date the S&P 500 is down 17.48%. So let's look at a 3-year period of time. This is on a 9% cap product, and we're looking at a client starting with $50,000 in their balance of their policy. And from point A to point B in that year, the S&P grew 18%. Now we have a 9% cap on this plan, so the $50,000 had a 9% growth at $4,500. So now the account value is at $54,500. The following year, we're looking at an 11% loss on the S&P. So on the index UL, the floor is 0. 0 is our hero that year. Our account value was $54,500. Even though the S&P went down 11%, our clients earned nothing that year, lost nothing. They still have $54,500. The very next year, it went up 6%. That's between the floor of 0, the cap of 9. Clients earned 6% off $54,500. That's an additional $3,270. So over that 3-year period of time, the clients have earned $57,770. When we compare that to just, let's say, money in the S&P 500 directly, an 18% gain in year 1 in the S&P, well, in that year they would have done better. They would have $59,000 compared to $54,500. But the following year, they lost 11%, bringing them down to $52,510. where again in the IUL they remained at 54.5. Then we gained 6% year 3. That brought them just in the S&P at 55,660 and 60 cents, compared to in the index UL $57,770. In index UL over that same period of time in a 9% cap product, clients would have been up $2,109.40 over that 3-year period. At URL, we say we're in the people business. We were founded in 1986. We have independent ownership. We have a knowledgeable and experienced staff to assist you with your business needs, whether that be life, annuities, health, Medicare, disability, long-term care, and employee benefits. We have a great website and technology to help you with your business. So even when we're not open, our website's open 24/7, where you can get forms, online applications, illustrations, quotes, product information, all of that information at your fingertips. We provide ongoing training to help you grow your business. We have a partnership program we call our Gemini Partnership Program, which is an elite partnership program for insurance professionals and advisors. We have a referral department, which we call our Orion department, and that helps referring agents, financial professionals, and their clients meet those clients' unique needs with our concierge insurance services. Thank you for joining us today. Appreciate your business, and please give us a call with your next opportunity. Thank you.